Hi friends, welcome back to Financialhacker. IPO of Craftsman Automation Limited is going to hit the market on 15th of this month. Should you subscribe? Will there be any listing gains? And will the investment be viable for long-term perspective? To answer all these questions, let's quickly jump into the company details, product range, promoters, financials and SWOT analysis. This is CA KVN MAHESH, and without any further delay, let's get started. Craftsman Automation started their journey in the year 1996 as a small-scale industry in the southern Indian city of Coimbatore, led by Srinivasan Ravi, and now they are leading engineering organization engaged in manufacturing of precision components. The company designs, develops, and manufactures a range of engineering products, and it is one of the leading players in the machining of cylinder blocks for their tractor segment. Craftsman has strong and well-established relationship with several domestic and global original equipment manufacturers as well as component manufacturers. The company is engaged in three business segments, namely automotive powertrain and others, automotive aluminum, and the third segment is industrial and engineering. Automotive powertrain and other segment, the key products in this segment are engine parts such as cylinder block and cylinder head, camshafts, transmission parts, gearbox housings, and turbochargers. 48% of the revenue is received from this segment for the fiscal 2020. And the second segment is automotive aluminum. Key products in this segment include crankcase, cylinder blocks for two-wheelers, engine and structural parts for passenger vehicles, and gearbox housing for heavy commercial vehicles. This segment accounts 17% of the total revenue for the financial year 2019-2020. And the third segment is industrial and engineering, which is further divided into two subsegments, namely high-end sub-assembly, contract manufacturing, and others. And the second subsegment is storage and material handling. This segment accounts 35% of the total revenue for the fiscal 2020. You can see the segment-wise customer base for the company over here. Its customer base includes Tata Motors, Daimler India, Tata Cummins, Mahindra and Mahindra, Royal Enfield, Escorts, Ashok Leyland, etc. Company has strategically located 12 manufacturing units in automotive hubs in India to enable just-in-time delivery. You can see the locations over here. And the company is considered as strategic and preferred supplier by many original equipment manufacturer customers and also the single source supplier in certain product categories for some of the key customers. With its track record, wide product portfolio, the company has been able to retain existing customers and also been able to attract new customers. It has a diversified client base with top 10 customers accounting 59.15% of its total revenue from its operations for 9 months ended December 2020. The promoter of this company is Srinivasan Ravi, and he is acting as the chairman and managing director of the company. He has experience of more than 34 years in the automotive industry. As on the date of this red herring prospectus, he holds 1,630,640 equity shares aggregated into 52.83% of the total paid up share capital of the company. Company's 824 crore IPO will open for subscription on March 15th and will close on 17th March 2021. The face value of the equity share is Rs 5. The issue includes fresh issue of equity shares aggregating 150 crores and offer for sale of up to 45,21,450 equity shares by the promoters and their group. The primary objective of the issue is for repaying the borrowings available by the company amounting to 120 crores and balance to meet the general corporate purpose of the company. The company has fixed price band at Rs 1,488 to 1,490 per share. Investors can bid for a minimum of 10 equity shares and in multiples thereafter, translating to a minimum investment of Rs 14,900. And a retail investors can apply for up to 13 lots, that is 130 shares with an investment of 1,93,700. The company has set the subscription limits as not more than 50% of the net issue for QIBs and a minimum of 15% and 35% for non-institutional investors and retail investors respectively. The allotment will take place on 22nd March. Refund to those who fail to get the allotments will begin on 23rd March 2021. While the credit of the shares into the demat account of the lucky bidders will take place on 24th March 2021. Post allotment, shares will be listed on both Bombay Stock Exchange and National Stock Exchange tentatively on 25th March 2021. Post issue, promoters of the company will hold 59.76% of the equity shares. This issue is jointly lead managed by Axis Capital Limited and IIFL Securities Limited. Link in Time India Private Limited is the registrar to the issue. Do you know that the success or failure of an IPO mainly depends on the lead managers? Most investors and IPO analysts check the profile of the lead manager before applying to an IPO. Let us have a look at the price information of past issues handled by them. On a summary note, the two book running lead managers associated with the current issue have handled 21 issues in the past 3 years, out of which 8 issues are closed below the issue price on the listing date. On the financial performance front, company has posted a net profit of 32 crores, 97 crores, 41 crores with a turnover of 1512 crores, 1818 crores and 1492 crores for 2018, 19 and 20 years respectively. Here if you observe the top and bottom line numbers of fiscal 2019 and 20, there is no growth and instead there is a negative growth in profits and turnover. For the first 9 months of the current fiscal ended December 2020, it has earned a net profit of rupees 50.66 crores on a turnover of rupees 1022 crores. Here we can witness a positive growth. Also, if you look at the EBITDA margins, there is a growth in percentage from 20.19% in 2018 to 27.24% in 2020. Coming to listed peers for this company are Bharat Forge Limited, Endurance Technologies Limited, Mahindra CIE Automotive Limited, Sundaram Fasteners Limited, Ramkrishna Forgings Limited, etc. EPS of the company is 20.41 per share, whereas EPS of the Endurance Technologies Limited is 40.20 per share for the fiscal 2020. Return on net worth for this company is 6.19%, which is very low when compared with the listed peers. And return on net worth for Endurance Technologies Limited is 18.81%, tops the listed peers. Net asset value per share of this company has outperformed all other listed peers at Rs 329.73 per share, and whereas the net asset value of Ramkrishna Forgings Limited is 268.28 per share. The price to earnings ratio of Ramkrishna Forgings Limited is 181.89 and Mahindra CIE Automotive Limited is 17.40. At rupees 1490, that is the upper price band limit of the issue, the annualized PE of the company based on 9 months EPS will be 46.61 as against industry composite PE of 72.76. From these numbers, we can say that the issue is reasonably priced based on the comparison with the listed peers. Company is a leading engineered product manufacturer and their diversified presence across various segments and design capability provides them with the flexibility to operate successfully across business cycles and mitigate any fluctuations in the industry. Robust financial performance in challenging business environment. Even though their revenues declined by 17.9% from 1,818 crores in 2019 to 1,492 crores in 2020 due to challenging business environment, they have improved their earnings before interest, tax, depreciation and amortization margins from 25.12% in 2019 to 27.24% in the fiscal 2020. According to CRISIL report, the company has the highest EBITDA margins for fiscal 2019 and fiscal 2020 across their listed peer groups. Long-term and well-established relationships with marked domestic and global OEMs, that is, original equipment manufacturers. With their track record and wide product portfolio, Craftsman has been able to retain their existing customers and has also been able to attract new customers. You can see the breakup of revenue from operations with their key customers over here. Extensive manufacturing footprint with strategically located manufacturing facilities. They have upgraded and continue to modernize their manufacturing facilities, infrastructure, machines, equipment and technology to allow them to offer a diverse product suite, reduce operation costs and drive productivity. Experienced management team supported by motivated and skilled workforce. The company benefited significantly from their strong management and technical teams. In particular, their promoter, chairman and managing director Srinivasan Ravi is a mechanical engineer and a first generation entrepreneur with over 34 years of relevant industry experience and strong relationships with several key industry peers. Strong product design capabilities is also one of the added advantages to the company. Impact of COVID-19. The pandemic outbreak has caused an economic downturn on a global scale. It is difficult for the company to predict the impact that COVID-19 will have on them, their customers or suppliers in the future. Even before the COVID-19, automobile sales in India has been degrowing on account of slowdown in the overall economy, higher insurance costs and the scheduled adoption of BS6 norms. Powertrain and allied component business is prone to EV risks. Company failed to de-risk its automotive powertrain divisions. In fact, the powertrain business mix in total revenue increased to 51% from 48% in 2020. As this division is highly prone to electronic vehicles, company financials might take a hit in the long run. Outstanding legal proceedings. there are certain outstanding civil and tax proceedings against the company and the directors. Unable to defend the same will lead to payment of around 21 crores, which will have an adverse effect on the business prospects, financial condition and reputation of the company. Underutilization of manufacturing capacities. You can see here the various installed capacities and their utilization in various years. I have highlighted the cases of underutilizations of capacities. If company is unable to ensure optimal utilization of their manufacturing capacities, then the company cannot enjoy the benefits of economies of the scale, which could have an adverse effect on their business and results of the operations. Concentration of revenues. Top 4 customers represent 43% of the revenue from operations and top 10 customers represent 59% of the revenue from operations for the period ended December 2020. From this we can say that company's growth is directly dependent on growth of their key customers. If their key customers fail to retain their market, then company's business, results of operation and financial condition may be adversely affected. Incurred significant indebtedness. As of December 2020, the company has outstanding debt amounting to 8,901 millions. Inability to comply with the repayment and other convenience in their financing agreements could adversely affect the business, financial condition, cash flow and credit rating. Loss-making group companies. MC Craftsman Machinery Private Limited has incurred losses in fiscals 2020, 2019 and 2018, and Carey Stahl Craftsman Enterprise Private Limited has incurred losses in fiscal 2020. And if they continue to incur such losses, it might adversely affect the consolidated results of the operation and financial condition of the company. Company is in the process of winding down its Singapore operations named Craftsman Automation Singapore Pty Limited, which was established in 2008 and was set up as a strategic overseas sourcing hub in Singapore. Primarily for the procurement of aluminium, which is one of company's key raw materials. The winding down of its subsidiary might adversely affect their business and results of their operations. After the completion of the issue, company's promoters along with their promoters group will continue to collectively hold substantial shareholding of 59.76% in the company, which will allow them to influence the outcome of matters submitted to shareholders for approval. On 13th March, the shares of the company are traded at 11.4% premium over the issue price in the grey market. That is, they are trading at 1,660 in the grey market, which is 170 rupees more than the issue price. From this, we can expect a positive reaction on the listing day. As you know, the current sentiment and the IPO market in India have been very positive for all investors over the last 2 quarters. On a closing note, here are the key points to be considered before subscribing to the issue. Grey market has reacted positively prior to the issue, as I have already mentioned. And from lead managers' point of view also, almost 60% of the previous IPOs led by them are oversubscribed and listed at higher premiums over the issue price on the listing day. And based on the company's financial data, the issue appears reasonably priced compared to its listed peers. And it has also shown recovery from the pandemic scare for the first 9 months of financial year 2021. And its long-term relationship with the global customers will definitely have a good expectation on its company. Investors looking for long-term bet may consider investing in this IPO. We strongly advise you to make proper research before making any significant investment decisions. If you are not able to do so, kindly reach out to the financial advisors. That's it for today, guys. Hope you have learned something new. I started my YouTube journey recently. So far, I am able to do 5 videos. One is related to budget 2021 and the other 4 are IPO reviews. If you are new to this channel, kindly watch my earlier videos and give your valuable feedback in the comment section. And don't forget to share, subscribe to my channel, Financial Hack. Thanks for your unconditional support. Thank you.